everyone, Robert here from The College Investor. Today we are going to look at a very interesting platform called Kickfurther. So Kickfurther is a new type of alternative investment platform where you can lend money to companies to help them fund their inventory. Now, you're not technically lending money to the company, you're actually buying part of a purchase order to fund this inventory, and the company will pay you back on the sales of the product. Woo, that sounds a little confusing, but really what you're doing is you're helping this company fund their inventory growth with the goal of this company selling all this inventory, paying you back with a nice little return on it. So it's a really interesting way to invest in companies that you find interesting. Most of these companies are very small or medium-sized businesses, and they're just looking for alternative funding methods to get their products out there into the marketplace. So with any alternative investment, there's high risk here, and we're going to kind of share with you what that risk looks like. But honestly, I wanted to just dive into this platform here, give you a glance and show you what it looks like. So when you land on Kickfurther, you have this homepage right here with some they call them co-ops. They have the featured co-ops, some featured brands they're working with. They show you exactly what the company is looking for, how much they've raised so far, what the expected margin is. So that's like what you'd make on it. And then like how much time is left to fund this offer. So, how it works is you pick a brand that you want to work with, you place an order, and then when the inventory sells, the co-op is going to pay you back with their profit margin on it, which is all done automatically through this platform. And Kickfurther, they make their money by taking a percentage of that. I think it's 1.5% when you withdraw your funds from the platform. Now, if you don't withdraw your funds and you keep reinvesting, they're not going to take out their percentage until you take out your money. So that's interesting too. So let's dive in here. What does this look like? After you create your account, we're going to browse. And you come up to this. So here's the live co-ops that they have for sale right now, or that they are offering right now. So the one we reviewed on the blog today, which you can find in the comment section in the notes right below this video, was Rise and Shine LLC. So when you click it, they're looking to raise $204,000, and they've only raised about $90,000 right now. They have 1,258 packages left. So what's a package? A package is the inventory you're buying. So one package costs $91.09. And if you go to the product info, here's like what their packages include. And here's all their products, what they're selling them for. And then here's how that the order breaks down. So what you're funding and what you're purchasing right here is all of this stuff. So you get 2% of this, 3% of that sale, 10% of that sale, all the way through. And that is what you're actually buying. The goal is they sell these things and they repay it for you. It's an 11% profit margin. So that means they're going to give you $1.11 for every dollar that you invest in the package. They estimate it's going to take about 8 months to sell through everything, and they give you a timeline here. So the offer closes on November 7th. There's about a 60-day lead time to get everything going, and then they expect the first inventory update and payout in February of next year, and then the next one March, April, May, June, and then they think by July of next year they would have fully paid off what they owe you. So what is this company? I mean, it starts off, it gives you like a little overview of what the company looks like. It says what they've been doing. So it looks like this company is, going to be selling on Walmart Marketplace. They have some branding, kind of sharing what you want to do. And then it comes down here to like the good stuff. This is what you really want to look at with the company. So it's the credibility overview. So number of Kickfurther brand reviews, 74. Yeah, take that with a grain of salt. Number of followers, take that with a grain of salt too. And this is what the company gets to write. So the company says like they've been in business, what their revenue's been. Here's their social following and everything. And that's great and all. But you can kind of put whatever you want here. We know you can buy followers. You can fake reviews. So when you're doing your diligence, take all this with a grain of salt. But it's helpful. I mean, this is what the company's trying to sell you on. So let's go into the past co-ops. Have they done things in the past? I always like to see the past, if the company's been responsible. And yes, this co-op has done a couple before. and they've had success, and they paid off both of those co-ops before. They paid off one really early, and they paid off another one right on time. So this co-op has already been successful, and this company has already bought inventory before. So they're trying to do it again, and so they've done well. That's awesome. So then you get to Kickfurther score. The Kickfurther score here is what Kickfurther rates on the company, and they give them a letter rating. So this is like a C1, kind of medium, middle of the road here. And here's why. They break it down. So the average margin, this metric isn't tied to the business's ability to make their paybacks. So they give them full points for that. The annual revenue of the co-op, they give them full points for that. That means the company's already making good money. Their social reach, I don't know, I kind of view that kind of low, but that's what they think. Their Alexa rank really has I don't even know why they include that as a measurement. Anyone can get their Alexa rank down. But this is the one that I really care about. Percent of the PO covered by the purchase order. So when it comes to businesses that are selling inventory, it's all about your purchase order, right? Your purchase order, like let's just say that go back to that Walmart. They said Walmart is going to sell it in their marketplace. So if Walmart wants to buy their product, Walmart gives them a purchase order, and they say, I want to buy 10,000 units at this price. And there usually is like a net 60, net 90, net 120. So they say, I'll buy it, and then 190 or 120 days, I'll pay you back for it. Because Walmart's goal is to sell it and then use the funds to pay off the purchase order. Well, when a company is buying inventory, it's helpful to have a purchase order already in place because now you have a guaranteed sale effectively. Well, in this case, the percent of PO covered by the purchase order is less than 1%. So that means they're buying all this inventory without a guaranteed buyer. So that means it's pretty risky to invest in this company as a investment because that inventory is not guaranteed to sell. Now, I'm sure this company's going to go out there and hustle, and they're going to work hard, and they're going to try to sell all this stuff, but they don't have any guarantees yet. So that's something to think about. And then their third-party reviews. These are on sites outside of it, and they only have 4 stars. So something to think about. And then here's the Kickfurther reviews, a bunch of 5 stars. But once again, I don't know, always take that with a grain of salt. So then they come in here, the company details. Okay, so here's the company details about Rise and Shine, about the owner. They give you a little bit of more information about it. Here's the product info. We already kind of went through this. They share with you all of it. Look, they link to their Amazon so you can see it's for sale out there already. We already talked about the timeline. And then here's some comments. And so these are people that are potentially investors or just on the platform. And they have a bunch of comments and people are discussing it as well. These are interesting to read. The company usually posts there. And so, it's just really interesting to read what they have to say, what people have to say about the firms. And it can be a good source of information, a little more unbiased information. But it also is people's opinions, and online opinions are always a little bit interesting. So let's go to another one here. Let's just take a look at it. I think this one, the iPlush. So it looks like they're going to make like kids plush toys. So let's go right over here to the company details. Oh, no, not company details. Company details. Down here at the bottom, we're going to go to the Kickfurther score. So here's one that I just want to jump right down there and show you this one, though. The percent of POs covered by purchase orders. So here you go. This company already has at least a purchase order. Now, there's a lot of other risk in the company because the margin's low and they have very little reach. A brand new website, some low third-party reviews. But I just wanted to share with you that someone has already agreed to buy at least a portion of this inventory. So that is a good sign because they're buying inventory because someone is already interested in selling that inventory. So a little less risk there, and then you can see they got more points for it than the other company we looked at. So that's kind of an overview of what you're doing. So you're investing in these packages. So like for this one, it's $54 to invest in the package. What are you getting? You're gonna buy these plush toys, and here's how it breaks down. They have like 5 different versions. It's almost split evenly across all those 5. So that's what you're investing in. You're investing in their inventory. When they sell this, they'll pay you back based on this timeline to go from there. Let's look at some other ones. Let's look at the funded ones. So they'll show you the overview. They'll show you any upcoming ones. They'll show you the funded ones, and they'll show you completed ones as well. So here's companies that have already successfully paid back what they bought. So we'll go to that in a second, but let's look at these funded ones because there's some interesting stuff in here I just want to share. So here's some funded ones. So you can see different offers that were already there. So here's looks like a beverage company, some kind of radio, some clothing, lots of different things, some food products ones. Some things that I like to look at are the dollar amount. So some of these are pretty small, which is interesting. And some of these have pretty low profit margins too. So that's also, a turn off a little bit, but not terribly. If you're guaranteed to get your money back in a few short, let's just go to this one, the Olamomo Nut Company at 7% margin. If you get that money back, in a short period of time, 7%, they're going to take 1.5%. So what are you at? 5.5%. But if you can get that 5.5% back in a little less than 6 months, your annualized return is pretty good on this thing. So I do want to share a little bit about Olamomo Nut Company because I think it's interesting. It's an interesting company because a little bit about this company. So here we go. We're going through this. Let's go to the Kickfurther score. They have a little higher score. Look, they are almost 100%, 75 to 100% covered by purchase orders, which is really interesting. So they're buying inventory. They're trying to fund their inventory that they already have orders for. Their reviews, though, are a little low. Their social reach is a little low. But their annual revenue growth is like just cranking it, and they're getting a lot of points for that. So I'll share with Olamomo Nut Company. I would still be leery about this investment a little bit, though, because I know I follow a lot of the crowdfunded platforms beyond this, and then this company was trying to raise equity earlier this year on another platform. So they're trying to raise a lot of money, and they're trying to fund their company in different ways. So I don't know, it's always a risk you're taking. So as you're investing in these companies and investing in their products, you have to realize that, why are they here? Why are they looking for money to fund their inventory? Why don't they have the money? Is it there's something wrong? I'm always a little leery on that front. So realize that. But if you're investing small amounts, so this Olamomo Nut Company is only looking for $26.98 a package, and they're going to pay you $1.07 for every dollar. So we're also, if you're only buying a little bit, you also have a lot less risk. If you're investing a lot, you have a lot higher risk. But realize that. So it's like, yes, it's high risk, but you're also investing small dollars. So, it goes both ways. And let's look at some of these completed offers just to kind of see. So the purple line is like what they expected to pay it back. The green line is what they did. So this company beat their expected timeline by, it looks like 4 months. That's month 4, 5, 6, 8, 10. So they're here, what is that? Month 7, 3 months. This one was right on their payment timeline. You kind of go through and you can see their different things. This one, just crushed it. This one missed their payments, and they came back and they repaid it early. So a little look at this one is, they're missing all their payment timelines right here. So what I wanted to show you with this is that there's risks involved in investing in this stuff. So some companies are making it and making their payments back. You can see across this top row. Some companies are not. So this company is missing all of their payments. They paid 100% back, but they missed it by a month. This company was missed a little bit, and then made it up. And it looks like they paid them some kind of bonus to them. And this company is just missed all the way through. But they ended up paying it back off. What is it? They were expecting to do it 7 months, and it looks like they did it in 10 months. So it took them a little longer than they thought. And you can see that goes back a long ways. There's a lot of funded deals on here. So I just want to, highlight that there's a lot of risk involved in this. So there's risk from why the company is looking for money. There's risk in this company never being able to sell their inventory. But, there's also ways for the company to get their money back. So, even if they don't, even if this company bails on you, there's legal alternatives that Kickfurther will take. They'll either take the inventory, they'll take the company to court to get the inventory. But whenever you're going down that path, you have to realize that it's expensive. So you're never going to, and chances are it's inventory that someone didn't want to buy anyways. So not only are you paying more money to get this inventory, the inventory is probably worth less than what you paid for it. So you might not get all your money back in that co-op. So it's really important to remember this is high risk, but it could be a good reward. It's, and these are annualized numbers because in 4 months, you might have gotten a 10% return on it or 5% return on it in 4 months, which breaks down to a good annualized number, which is a decent return. But to get these huge returns, you have to take on that risk. I would also like to share with you that there's also, a lot of people that are talking about Kickfurther on different platforms. So these companies usually have some kind of, social following or online following. So with any kind of investment, I think you should really do your due diligence. I think you should Google the company, look at the reviews for yourself. I think you should also look on forums like Reddit. There's a lot of Reddits out there, subreddits that discuss Kickfurther opportunities, and they also discuss these companies as a whole. So if you're going to invest in these companies, if you're going to invest in these companies' inventories, do your due diligence, because you don't want to just throw money away. Yes, it's not a lot of money, but it's still money, and you want to get ahead of the game and not be losing it all the time. So that's Kickfurther, guys. It's a really interesting platform. They have a really interesting business model where you can invest in inventory, and hopefully that inventory sells. But it's not for everyone. So you have to do your own due diligence and really see if it's for you. So if you are interested in checking out Kickfurther, we have a special $5 promo if you sign up with our code. If you go to thecollegeinvestor.com/Kickfurther, you get $5 credited to your account, which gets you, some of these are only $20 offers. So you can, be 25% of your way there on your first investment. And if you go and invest or you don't invest and check out the platform, we'd still love for you to leave a comment and tell us your thoughts on Kickfurther and tell us what you are, thinking, what you invested in, how it didn't do. I'd love to know. So if you go into the comments right below this video, you can see the link to the article on the blog. Click it, check it out, leave a comment. Love to really know what you're thinking. All right, guys. Well, thank you so much for checking out this Kickfurther review. I'd love to know what you're thinking. If you like what we're doing here, please subscribe to our channel. It goes a long way with YouTube and getting our videos out there for more people to do it. And as always, I will see you next week with another episode of The College Investor TV. Thanks, guys. I appreciate it.